Today is Monday, March 26th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Alan, last week President Trump ordered tariffs on $50 billion of Chinese imports due to alleged intellectual property abuses, and the Chinese responded with levies of $3 billion. Will these trade tariffs drastically slow the global economy?
I do not think that they will. I think that there's more concern that in the media that it will have more impact than I believe that it actually will. And now there's even some talk that there are some negotiations being planned between the U.S. and China. So I do not think these problems will measurably slow the U.S. economy.
Steve, let me flip over to you and the impact on something like this in grain. Can you speak to the market impact of China's potential sanctions against U.S. pork and soybean exports?
I think first reaction on the pork industry was negative, but China has almost increased their pork imports by 230% in the last 5 years. But U.S. share has dropped from 30% down to only 10%. So the impact from a pork industry standpoint might be something locally, but it's not a big deal as far as our export share to China. And we understand that the Chinese soybean crushers have lobbied very strong with the government not to include soybeans on any tariffs retaliation. So I think from an agricultural standpoint, it'll be minimal.
Flipping back to the dollar, Alan, the U.S. dollar index fell to a 6-week low today. What is your outlook for the U.S. dollar?
I'm still thinking lower for the dollar and higher for other currencies, especially the euro currency. So even though the Fed is still on track to raise rates 3 times this year, other central banks are becoming a bit more aggressive in their interest rate policies. Even the Bank of England could be raising rates at their upcoming meeting in May. So it appears to me that the dollar index is likely to continue lower.
Alan, gold futures broke out above major downtrend lines last week. Is this due to just the instability of the markets in general and some of the political things that are going on?
A lot of that can be attributed to flight to quality buying, but I think some of it is linked to inflation concerns that are starting to heat up again. In fact, we had Canada last week announcing their highest level of inflation in 3 years. And even today, with the tensions apparently easing between the U.S. and China, the gold market is actually $5 higher. So the gold market should have been lower on flight to quality long liquidation, which in fact it was not today. So that in itself could be viewed as a sign of strength for the precious metals, especially the gold.
Steve, continuing to jump around the globe here with the grains. South American grains this morning. What's the latest supply and demand update for South America?
Right now, we think that the Argentina has lost 30% of its corn and soybean crop, and we think that the big impact is that people that buy meal are going to have to find other sources than Argentina. There's even talk that China might have to import more soybeans than we think, and that they're going to have to crush for meal and actually become a net exporter of meal. We also note that South American corn crops will be smaller, and we think that we might get a little export demand out of that, but the corn market has too much corn here in the United States to allow much of a rally. But we're seeing meal jump about $30 a ton last week. It had beans rallied 40 cents and corn rallied 10 cents, and all that was just kind of restructuring who buys meal and from where.
Turning toward home now, what will the USDA say this week about the 2018 planted acres and the March 1st grain stocks?
Market expects them to show that March 1 soybean stocks are record high and that the farmer will plant a record amount of soybeans this year. Also show maybe a little bit lower corn acres and maybe a little bit lower wheat stocks from a year ago. In general, this report tends to be somewhat muted in that April 1 will start trading weather here in the United States.
And with weather, planting on the near horizon, U.S. Midwest soils are cold, southern fields are wet. Do you see delays in the field work?
Right now, I talked to our weather guy this morning, and he doesn't. He thinks there's going to be a switch flipped on April 15th, and that the jet stream will move further north and allow for normal conditions to plant. On our farm, we usually try to plant at April 10th, and it might be a week late this year, but if this pattern changes, everything will get planted on time.
All right, remember, the views and opinions expressed today on this video are solely those of our guests. It should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like to have more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.